Joining us now is somebody who puts it together better than anybody, and that is Helima Croft, Global Head of Commodities Strategy at RBC Capital Markets and a CNBC contributor. Helima, we try to touch on just a little bit of what's going on there. We could probably do the whole show on just laying out the events of the last couple of weeks. From where you see it, and your research is must-read on Wall Street, where do we stand right now?
I mean, I think we're in this situation with Russia right now where we just don't know how far they're going to go in terms of weaponizing energy. They've basically said, as you said, no gas through Nord Stream 1. Are they going to cut off Turk Stream? Are they going to basically suspend all gas through Ukraine? Are they going to take Europe to zero? And the Europeans have been very clear. They've built storage, they're building out infrastructure. But if we get a very cold winter in Europe, I don't see how we're not going to get through this without major industrial curtailment, rationing. It's going to be very, very expensive in terms of what governments are going to have to pay to keep their populations at all satisfied with energy prices.
And this is an incredibly important point that you're making, and I want to highlight for our audience that is sort of maybe following the story. They know a little bit about it, but they don't really understand where we stand. They hear that, okay, German storage is at 85%, and right, that is good news. But here's the issue. Germany has never existed through a winter on storage alone. They tend to draw right, their storage down, do they not, even with additional flows?
Absolutely. And again, they've gotten to 85% because Russian gas was flowing up till, a couple months ago. Brian, this may not be a crisis just for this winter. This could be a multi-winter crisis because if there is no gas going forward, Europe is going to have a huge supply problem going forward, even with this infrastructure build-up, because again, there's not a lot of additional gas in the system. I was just in Norway. The Norwegians have really raised their oil and gas production by close to 10%, but they are saying we're #1 supplier to Europe for now, but we don't know how much more we can do. We're pretty much tapped out. So that is a real challenge, is there's just not a lot of additional gas volumes out there.
Well, thankfully, the United States has been selling liquefied natural gas. And by the way, the Chinese have probably been reselling some, have they not? I mean, we sell it from Texas. Yes. The Chinese take ownership of it. The ship gets halfway across the Pacific, and then somebody in the UK and Europe buys it back from the Chinese at some hugely elevated rate because they need the liquefied natural gas. If the Chinese, for some reason, start to get aggressive in buying that gas again and not reselling it, or it gets really cold in China, again, where they need the energy, or they stop the COVID lockdowns, what then?
Brian, I mean, this is the big conundrum, is if we have a cold winter, not only in Europe, but in Asia, and they bid away these volumes. I mean, as you know, think about Qatar, huge natural gas supplier. Their volumes are largely under long-term contract to Asia. If you have Asia actually entering the spot market and competing with Europe for volumes, that is only going to make it that much more challenging for Europe to get through winter.
Okay, OPEC. Let's talk OPEC, because Monday, it was Labor Day here, so they had their meeting. We weren't, I knew you were probably listening in. I was doing the best I could. They effectively cut production by rolling back their quota by 100,000 that they had added a couple of months earlier after the President Biden went there. What is OPEC trying to do? What do you think their end goal is? This just to sort of embarrass, do you think, the United States, or do they have a real demand fear scenario that they are confronting?
I mean, I think OPEC is back into active market management. I think what they want to do is to signal they're not in cruise control. I mean, this was kind of a micro move. This was not a major move from a physical market standpoint. But what I think is interesting is when you read the statement, they basically said, we don't have to wait 30 days. We can come into this market very quickly to take additional action as needed. So if you're thinking about shorting oil and you have a major move lower or a major event like Iran coming back out of the market, which I still think is going to be very challenging, OPEC is basically ready to go back in quickly and adjust production.
Helima Croft, RBC Capital Markets, as we said, laying it out like nobody else can. We really appreciate it, Helima. Thank you very much.